project. Previously, I was working for a bank, a UK bank. Now I moved into an Australian bank. And previous project focus was my on consumer lending. Now it has been moved to digital. Yeah, that's it.
Okay, thank you, Sachdeva. And Amar, Arunba, Karan, Lakshmi, Pranay, Pratik.
Yeah.
So hello everyone.
Who is going to
Myself
start next?
Pratik here,
Yeah, hi Pratik.
and yeah, yeah. Hi, hello everyone. So giving you about my introduction. I have total of 4.5 years of experience, and in that 3.5 is about the BA industry. And initially I started as a, like everybody know in the group, like I was like from junior BA to the BA level, from smart cities power domain to the HR systems, like implementing the in-house HR systems for the organizations and for the applicable divisions. And now I'm back to the smart city project in Vizag. I'll be placed out of client location in 2 weeks of time. So this is all about me.
Okay, Pratik. Thank you so much. So, Lakshmi, you are unmute.
I get the last to be okay, fine.
Yeah, Pratik, you can
Hi
mute
guys, this is Lakshmi
yourself.
here. I'm actually I'm sorry.
No, I was saying to Pratik that Pratik, you can mute yourself from your end.
Okay, okay.
Pratik. Yeah, thank you.
I started out my career after BCom as a finance analyst, and then I became a data analyst, and then I studied on MBA in business analytics and finance, then moved on to HCL as a business analyst. So me and Love Sachdeva here actually we worked together initially, and then I got married and I got rid of the job. My domain is banking, and I used to work for CBA in Australia.
So, you are done?
Okay, hi guys.
Yeah, hi
My name
Pranay.
is Pranay here.
Yeah, hi Pranay.
Hey everyone.
Lakshmi, just a
I'm
minute,
working
Pranay.
as a business
Lakshmi, you
analyst
can
in
mute.
Accenture.
Okay, thank you. Yeah, Pranay, tell me.
Uh, yeah, hello everyone. I'm Pranay. I'm working with Accenture in a PNC insurance project. The client company is based in US, and it's been like 1.5 years in the company. I started as a tester, and I've moved on to business analysis recently. That's it from my side.
Okay, Pranay, thank you.
So I'll take the next tab on this. Hi guys, Karan this side. Can you guys hear me?
Yeah, hi Karan.
Am I audible?
Yeah, you are audible.
Okay, hi. Yeah. So my background, I'm working as a business analyst come product owner with the retail company. It's called Alshaya India. Alshaya is a Middle Eastern retailer. So I'm working on the e-commerce journey. Before that, I worked with HCL Technologies in e-commerce division again. So core domain would be retail. So everything from procurement to supply chain, along with e-commerce. So your digital technologies like Hybrids, Magentos, Sterlings, and something on digital marketing. So that's the crux of what I do. And then I have a suggestion that I've created a Google spreadsheet wherein we all can fill in our details. So I've shared that link on WhatsApp as well. So if you guys can look into it and suggest changes so that at least we have something written that we know what are the domains and we can plan these sessions based on that repository that we create. Yep, that's it.
Okay, Karan, you just share that link and
Yep.
yeah. Hello.
Cool, I'll do that.
Okay, thank you.
Yeah, I'll do that.
Any new member?
Hi everyone. So I'll get started.
Amar, just wait. There
I
are.
think Arunava has not yet introduced himself.
Yeah, Arunava is there. Then Puneet is also
Yeah,
there.
so yeah, thanks.
Yeah,
Yeah, so
Arunava.
Puneet just joined his audio. He wasn't on the so far. Okay, anyways. So hi, this is Arunava and I'm based in Kolkata for a IT-based product company. And primarily I deal with the tools about an end-to-end software lifecycle management and its implementation, cutover strategies, migrations and everything that is associated with it. And my total work experience is 3 years and 10 months now. And I'm an MCA postgraduate. And before that, I did my BSc. And ever since then, I've been working as a business analyst from the very start of my career. So, ready for this session.
Okay, Arunava. Thank you. Guys, I just forgot something to tell you. Currently, I'm pursuing my MBA from Narsi Manji, Mumbai. So, is there anyone who is pursuing MBA or PGDBM from NMIMS or any other institute?
Is it an executive MBA or distance
Yeah, it's an
learning or it's a full-time thing?
yeah, it's executive.
Okay. So you have any particular question around that? So I'm a full-time MBA, so from XIMB.
XIMB. Okay.
If you have anything specific, I know people from Narsi Munji. So if you have any questions, just let me know.
Okay. Sure. Thank you. Thank you, Karan.
Yep.
So we have Puneet. Puneet, are you there? Hi, Puneet.
I guess there's some problem with the audio.
Yeah, okay. So is there anyone left? I think someone joined Reena. Someone has dropped a message on WhatsApp group, but she's not there in this list.
She might have joined the old one, the old meeting.
Let me inform her the new ID.
Yeah, I just already did that. Okay. I guess there's another one, Sudeep. So Sudeep and Isrina. So I've just shared that link. I guess that's the confusion over there.
Hello everyone. Tariq is there with me now, so I'll just ask him to have an introduction about him now. Tariq, please come.
Yeah, Tariq.
Puneet, Reena, Tariq. If you can have the introduction, we'll get
Reena.
started.
Reena.
Sorry guys, he got a client call, so he cannot join for this. He might join after 30 minutes.
Okay, okay, fine. And Shashank is there. So Shashank and Sudeep Datta. So you guys can introduce yourself. Hi Shashank.
I think they've just joined. Let's start with Reena.
Yeah. Hi Rina, are you there?
Reena, are you on mute by any chance? Probably, because even if you're speaking, we can't hear you.
Hello?
Yeah,
We
hi
can hear
Rina.
you now.
Yes. Hello.
Can you hear me?
Yes.
Hello?
Yes,
Yeah,
we can
Reena,
hear
go
you.
ahead.
Hi all, this is Reena here.
Yeah, hi Rina.
Hello.
Okay, you want me to start with the introduction?
Yeah, actually a quick interaction session is going on. So
Okay.
yeah.
Okay, I'm Reena and I have almost like 5 years of experience with investment banking. I'm looking for a change in a BA as a BA role. So I'm like quite interested, that's why I'm here.
So you're working as a BA in investment banking and you're looking for a change in domain, or is it like you're working in investment banking as some role and you're trying to move to a BA role?
Investment banking as I'm looking for a BA role. Is it audible? Am I audible to all?
Yeah, Rina, you are audible.
Yes, you are audible.
Actually, Rina, we are expecting something more to listen about you.
Sorry?
Anyways, guys, there is Shashank is there. So Shashank, you there? Shashank and Sudeep is also there. I think Puneet is facing.
Yes. Sudeep here.
Yeah, hi Sudeep.
Yeah. Good afternoon to all.
Good afternoon.
Yeah, so I'm having around 5+ years of experience as a business analyst. Am I audible?
Yeah.
Yes. So I am into this ERP and CRM implementations.
So any specific CRM tool that you worked on, or it's it could be any CRM?
It's a in-house CRM and it's a in-house ERP.
Oh, great.
So which contains this inventory management, supply chain management, HRMS, HR as a service, and warehouse management system, document management system.
So you are dealing with all of these domains, or it's a specific among all this, like a warehousing or a procurement, or?
Actually, with all of these, so here we are not into as a product, so we are into this customization. So I'm dealing with all of these.
Cool. Good to know that.
Yeah, so I'm just looking for a change in Pune location. I'm interested in Pune location.
And I think,
So
Samir, you should lay the background that the forum currently is not for a change or something. We'll obviously share opportunities that we have, but this one is to just connect with each other, share knowledge.
Even I was thinking the same.
Okay, fine.
Rina,
I got it.
So you
Yeah.
guys can just keep
Down the
following.
road, obviously, we'll go there to that direction, but not in the first session.
Yeah, actually the objective
Okay,
of this
fine,
session
fine.
is something different.
Okay.
Okay, so guys, right now I'm giving access to Amar so that he will start with the presentation. Okay.
Okay.
Yeah.
Guys, this is Shashank here. Before Amar starts, I would also like to introduce. So this is Shashank here, and I'm working as a senior business analyst with Netling Software Private Limited. It's actually a US-based organization, but its headquarters are in Bhopal, MP. And so we are developing one business intelligence platform. So you can say my domain is business intelligence and analytics. And so the overall, I'm looking, I'm in BA as in product management manager. So I'm looking for all the parts, product manager, project management, and BA part as well. So doing the user research, experiments, research part, and creating the prototypes, demos, and then yeah, presenting the product, incremental product value to the management, and then going to the clients. So complete BA role I'm playing here. Yeah, this is about me. Was I audible?
Yes, Shashank. Thank you for the introduction.
Oh, thank you.
Yeah, thanks everyone for the quick intro which we had. So I believe everyone can be on mute. If at all there is any questions, you can stop me anywhere. You can ask for what is required. Can everyone see my screen? Just a
Yes,
quick
Amar.
yes, no?
Yes, we can see. Yes, yes.
Thanks. Yeah. For those who in the introduction, somebody said that they want to switch to BA. So business analyst, I see them. I see the business analyst role in in two ways. There are two faces of a coin. One side it is the BA skills which you has to be acquired, and the other side is the domain knowledge which you have to carry. So in this particular session, we are going to analyze or focus on the other side, that is domain knowledge. Probably in the upcoming sessions, we can also have BA skills or BA techniques or tools which are used, right? So today we are understanding and giving a basic overview of insurance domain. So what is there for us for a business analyst in insurance domain? Okay. Before that, anybody who is there who is already working in insurance domain, if they want to add up to what I have said, or if they want to correct, or if they want to add, they can always stop me during this course of presentation. Yeah, with that disclaimer, let me start my presentation, right? So here's the agenda. First of all, I didn't know the audience, whether it would be from the insurance background or from non-insurance background, but then I'm trying to cover the basics, I mean, the basic building blocks of insurance, so that it becomes very simple to understand in the later parts. So here's the overview of the agenda for today. Firstly, we are going to give a brief introduction on insurance, including what is risk and what are the risk management techniques, stuffs like that. And after that, we are going to see an overview of a insurance business process flow. So this will be helpful for the business analyst. I mean, what are the opportunities, or what are the functions of, or what are the areas in the business cycle, insurance cycle, that we can capture, or that we can work on. Next is the insurance line of business. What are the different line of business, what insurance offers, and what is the scope for us in Indian markets and in US markets. Next is some of the basic insurance terminologies. If at all you come across, like I think most of them own an insurance, right? So you should be able to understand some of the basic terminologies which are there on your policy document. So such terminologies will be covered. And then finally, we are just touching up upon the certification which are available for the insurance business analyst. not specifically to business analyst, but then to improve your domain knowledge in insurance. Yeah, so let's start it. So first is first before going to insurance, why insurance was important or why insurance came into picture. So that's because of risk. So let us know what is risk. So risk is an exposure unit or a condition that presents the chance of loss. So risk is something which presents a chance of loss. So when I say risk, it may be anything like, you are riding a motorcycle, you met with an accident, that's a risk. Or your health issues, that may be a risk. So to cover that particular risk, insurance came into picture. Okay, so risk is definitely uncertainty. So risk is something which is uncertain to us. So we never know that the risk is going to happen, right? So we'll again come back to it, like what are the different types of risk as well. Okay, so when things go unexpectedly wrong, for that we'll have to cover ourselves. So that is insurance. Okay, so any questions, you can please stop me, or feel free to stop me or ask any questions, or if you want to even add up to what I've said.
Sure.
So as I said, there are different types of risk. Okay, so basically if I have to define from my way, I've divided it into two parts: the risk which can be insured and the risk which cannot be. Okay, so the risks which can be insured are pure risk. Okay, they are called as pure risk, and the ones which cannot be insured are called as speculative or the fundamental ones, fundamental risk. So let's see one by one. So what is a pure risk? So pure risk are the ones which are fortuitous or unknown events. Okay, so if I have to give an example to make it very clear, so pure risk are the one which do not have a profit. Okay, so after this risk happens, you either incur a loss or there is a no loss no gain position. These are the only two ways you have to, after the pure risk has happened. Okay, say for example, if you say motorcycle, okay, so if I consider motorcycle, you all have a bike probably. So if you are riding a bike on the street, you either meet with an accident or you don't. So the possible outcomes are, if you meet with an accident, you are into a loss. Okay, and if you are not going to meet with an accident, you are in a state wherein you have not incurred a loss nor even incurred any profit. Correct? No gain, no loss state. So these type of risks are called as pure risk, and these are unplanned and unexpected risk. Okay, and for these particular type of risk, we have insurance. I mean, you can insure this type of risk. Okay, the next one is speculative risk, which cannot be insured. So this risk is something which can give rise to profit. Say for example, betting and gambling, a good example for speculative risk. Like if you are betting on a horse ride, right, you can either lose your money or you can even either win as well, right? So when there is a chance of winning the money or you are in a chance to profit from that particular risk, that's not insured. Okay, so these kind of risks are not insured. Okay, so you may have to find some other type of risk management technique apart from insurance. Okay, so insurance is, I think you may have come to know now by now that insurance is a risk management technique, right? Next is fundamental risk. Okay, so these are the risks which are outside the control of an individual. These are like natural disasters, and once this happens, these will create catastrophe, and this will also incur a huge loss. Okay, so such risks are called as flood, earthquake, tsunami. So these are called as fundamental risks. These are outside the control of a human being or individual, and it's a natural cause of loss. Any questions? Okay, I'll take that as a no.
Amar,
Sorry, any questions?
Yeah, Amar, can you please tell me, like, is there any basic component based on which the things are getting defined, like what is a known risk or what is known risk?
Sorry, I didn't get your question.
I am asking you, is there any basic component based on which the things are get defined, like what is a known risk and what is known risk? Who define the
No,
thing?
I'm not saying that it's a known or unknown. Okay, so the risk can be defined as pure risk and speculative risk. Okay, so the pure risks are the one which are unplanned. Okay, you don't have any component as such. Okay, if it is unplanned, if it is unexpected, that is a pure risk. And if you are taking an insurance coverage, the risk will be clearly mentioned. Okay, in your policy coverage, what risks are covered, what are not covered, that are defined already by the insurance company and the state regulators. So that answers your question.
Yeah, please proceed.
Okay. So again, explaining the fundamental risk, some may come back and question that flood is insured, right? Even though I have termed it as risk which cannot be insured, flood, even earthquake is insured, right? So these kind of risks are insured, but these are not insured in the basic policy. If you want to have an insurance for this particular risk, then you have to pay an additional premium, and you have to have a specialty lines for that. So that's the reason it's divided into a non-insurable risk. Okay, so moving ahead, let's see different types of risk management techniques. Okay, so we now know that what is a risk and different types of risk are there. Now, how can you manage those particular risks? So the first technique here is risk avoidance. Okay, so when I say risk avoidance, yeah.
Amar, I just pinged in the chat. I just wanted to know if like fire is also a part of the fundamental risk, and does it require specialized insurance?
No, fire is not a fundamental risk. Fire is a pure risk until and unless it is not intentionally, if it is intentionally given rise, then it's not covered. But it's a pure risk. It can be covered.
I'm sorry, I'm still not clear on the difference between the fundamental and the pure, because when flood is supposed to happen in a natural phenomenon way, or earthquake, something happens due to a natural phenomenon. So fire could also start out the same way, right? And then why is it not a part of the fundamental risk?
No, because the damage what flood can cause is comparably less on fire. Okay. So so fire is something which it can be controlled if you have a protective devices in your house, say sprinkler system. You have other protective devices, then that can be controlled. But flood is something which is outside the control, right? So when you're staying in a house, you cannot say that the fire just came like that. It may have to be some because of electric short circuit or something like that, right?
Okay, fine.
And Amar, more of the speculative risk regarding that, you mean to say it's a fluctuating one?
Yes, right. You can say easily that speculative risk are the ones which can give rise to profit. Okay. And
so insurance profit mean to say like even it might be the more of loss also. We might gain nothing or else we can end up gaining more.
Yeah. When there's a probability of getting more, then the insurance company says that I'm not going to insure you, because that's against the principle of insurance, which we'll be covering in the later slides.
Okay, cool.
Okay.
Sure.
Yeah. So if you're thinking of betting and gambling, okay, this is also one type of risk. So now if you want to manage this particular risk, you have to go for some other management technique, other risk management technique apart from insurance. Okay. Yeah. So all these risks can be managed, but not from insurance. Okay.
Okay.
Good. So these are the risk management techniques which we have. Out of this, one of them is insurance. Okay. I'll let you know which one is that. So first of all, it is risk avoidance. So when I say risk avoidance, means the person or the individual is completely avoiding the occurrence of that risk. Okay. If I have to give you an example, say you have a motorcycle, okay, and you are planning to have a weekend drive to some other state or some other city, okay, but there is a risk in that you might meet with an accident. Now some risk might happen, right? So you completely avoid it. I mean, you will not go on the motorcycle. Okay, you may opt for some other means of transport, but not with motorcycle. So you have completely avoided the risk of meeting with an accident with the motorcycle. You're getting that?
Yes.
Yeah. So next is risk prevention. So risk prevention is like, reducing the frequency of the risk. Okay, you are reducing the frequency of the loss. So if I have to take the same example, say for example, you take your bike twice in a week. Okay, twice in a week to the office. Okay, just to prevent the frequency, so you only take only once. Okay, thereby you are decreasing the frequency of loss, reduce the severity of the loss. Same example to make it explain that better. You are taking your bike to the office, and but you are wearing all these protective devices, arm guard, you have the helmet, everything. So even if you meet with an accident, the severity of that loss will be reduced. So that is risk reduction. Okay. The next type of risk is management technique is risk retention. Here what you are going to do is you are going to retain that risk to yourself. Say you say that even if I meet with an accident, I have $100 which can be given to the hospital and I can take care of myself. So you are retaining that risk. Okay, you are not avoiding it definitely, but you are trying to retain it. Okay. And the next important technique is risk transfer. That's insurance. So you are transferring the risk from one individual to another party. Okay, that's insurance. Like for example, you have taken an insurance policy on your bike and you are transferring that particular risk to the insurer. So are these risk management techniques clear?
Yeah.
Yeah, Amar, the things are clear.
So we'll go ahead.
Amar, the things are clear, but I have something in my mind.
Sorry?
Yeah, Amar, can you listen me?
I'm not.
Amar, can you listen
Hello?
me?
Yeah, now it's better. Yeah, please.
Amar, actually the things are clear, but I have something in my mind. Like my question is, who define this kind of risk? Like which will come under which type? And as a BA, how it helps you? Like I mean to say, how you are using these things in your daily roles.
Okay. See, you are talking about the risk management techniques?
No, I'm not asking you risk management technique. I'm asking you how these things are helping you in your daily roles.
Amar, he is like a little confused about what the BA has to do with this risk management techniques. So, Samir, one point I would like to add is this thing, that this gives us a basic understanding of what insurance is and what our clients are thinking and how they are defining the policies. Sorry, what?
Yeah, I can understand that these are the basic things a person need to know to work. But how these things? Yeah,
This basic principles gives us more understanding of the insurance, and so having clear concepts about these things gives us a good confidence while talking to the client.
Okay.
That is one of the advantage we get.
Okay. Okay.
Yeah, if you're asking from that perspective, what the business analyst has to do with these kind of risk management techniques, understanding them, then definitely has I think it's Karan, right? As rightly Karan said, so these are the basic building blocks. Love, yeah, sorry, Love. So these are the basic building blocks of insurance.
It was Pranay.
Okay, yeah, Pranay. Yeah, Pranay, thanks Pranay, for that. So we will be coming to what a business analyst are going to handle. I mean, what are the functions and what are their roles? Okay, that's in the later slides. So this is only trying to give you a basic understanding of what insurance is. Okay, we have not yet reached what a business analyst does. So if you're talking to a client about a coverage, so you have to be knowing what is a risk, what type of risk it is covering, all these basic things you should be clear of. So that's the reason we have started from here. So I believe even though you had insurance policy till now, you never knew that we are transferring actually the risk, right? So these set of things should be aware, and that's the reason we are starting from here. Okay.
Thank you.
Yeah, thank you. Right, now we'll discuss what is insurance. Okay. So insurance is a contract for transferring a risk from a person, business or organization to an insurance company, which is called as an insurer, that agrees to pay for a premium. Okay. So here there are 2 to 3 words which we have to take care of. One is insurance is a contract. Okay. Insurance is a contract between insured and the insurer. Insured is the person who has taken the insurance policy. Insurer is the organization or a business which is giving you an insurance policy. Okay. So here there is a contract between these two people, individuals, you can say, or parties, that the insured will pay a premium. A premium is because of the guarantee which the insurance company is saying that I am going to cover you for this particular risk. So for that particular, it agrees to pay potential losses in exchange for a premium. Okay. So insurance saves losses of few using premium accumulated from many. We'll discuss this point later. The main purpose of this insurance is to protect people and organizations from the adverse financial consequences of certain unpredictable events. So this is self-explanatory. Okay. So what are the different types of insurance? So basically, the insurance is divided into 2 parts. One is called as life. The other is a PNC domain, or the PNC, which is in US markets, in fact, or in India, you say non-life. So one is into life and one is non-life. So what are included in life? Anything related to health, life, or the annuities. And what are into property? All your property like home, fire, a home, auto, pet, flood, earthquake, everything is covered in property. Okay. And casualty are workers' compensation, disability, liability, etc. Okay. So these are the major types of insurance. So the next point is, what are the characteristics of ideally insurable conditions? Okay. So what kind of loss exposures can be covered, or what are the characteristics of an ideal insurable conditions? Okay. So one, it should have a large number of similar exposure units. Say for example, if I have to give you an example, you are trying to insure one house. Okay. Then in that particular area, there should be similar exposure units. So one exposure unit is your house. Okay. There should be many houses in the same location. Okay. And the losses should be accidental, which we have already come across. And then the losses should be definite and measurable. So any loss should be definite. It should have a time. It should have a location, and it should be measurable. I mean, the amount should be measurable in monetary terms. Okay. Losses should not be catastrophic. As I said, those are fundamental risk actually. And then the losses that are economically feasible to insure. So best example for this is you cannot insure your depreciation, okay, because this is not economically feasible. So this tends to happen. So these things are these are the characteristics of an ideally insurable conditions. Okay. So the next topic is law of large numbers. So many people, the reason why I have included this slide is, many people ask us like, how can an insurance company profit? Say for example, because we pay a premium, okay, and they insure our losses. Okay, say for example, we pay a very small amount as a premium. We pay only 100 rupees as a premium, but they are insuring 100,000 rupees of our motorcycle or a house, right? So that is because of this mathematical fact, that is law of large numbers. So it is the probability to determine the chance of event occurring. Okay. So what is the important part here is the number of exposure units are more. Okay. So if you see this table down below, when you have a sample size of 10, okay, and the expected losses are 15. Expected losses are 15, okay, and then the actual losses are 15. Then the percentage of loss is 15%. So the deviation is 0. Okay, and if you increase this particular percentage, if you increase this sample size, the deviation goes on reducing here. You see this deviation is 5 and this deviation is 0.05. So the insurance company come up with a more accurate prediction that that there is a less deviation from the actual losses and the expected losses. So hence the insurance company, you know, they have these actuaries who work on a lot of mathematical or historical data, who come up with the rates, what should be charged for one person, or what should be charged for this set of group of people. So those works are done by the actuaries. Okay, and the next section here is the principles of insurance. Okay, so these, yeah.
How they calculate this expected
Hello.
losses?
Sorry?
I'm asking insurance companies how they calculate the expected loss, on what basis they used to calculate.
Yeah, that is based on the historical data which they have. Okay, say for example in the health life insurance we have something called as mortality rate, right? So based on that, even on the sex, on the age, so these are the various factors based on which they calculate.
Okay.
Okay. So these are the important principles based on which the insurance works. Okay. First point is insurable interest. Okay. What is insurable interest? It is the legal right to insure arising out of a financial relationship recognized under the law between the insured and the subject matter of insurance. Insurance is said to have a damage subject matter would cause. Okay, let me give an example and make you understand what is insurable interest. Okay. See, when there is an individual, he should have his insurable interest on the things which he is going to insure. Say for example, you can insure your bike, you can insure your house, okay, but you cannot insure your wife's friend, or you cannot insure your friends, you cannot be insure your friend, because there is no insurable interest in it. So how do you know whether there is an insurable interest or not? So if the loss happens to that particular subject matter of insurance, then there should be financial loss to the insured. You getting my point? What is insurable interest?
Yes, Amar.
Okay.
Yes, Amar.
So next point is utmost. Yeah.
Yes, Amar. Please proceed.
Yeah. So next point is utmost good faith. So utmost good faith is one more principle wherein it says that, you know, both the insured and the insurer to be a contract are required to observe a good faith, which means that as an insured, okay, you should be able to disclose all the material facts. Say for example, if you're insuring your life, then you have to declare that if you have any disease, or if you are prone to any habits, if you smoke or not. So all these material facts should be disclosed to the insurer. And in other terms as well, the insurer also has to fulfill his promise that he will pay the claim, or he will pay you if you undergo an loss. So this is one more principle which is called as utmost good faith. Next principle is indemnity. Okay, indemnity is, you know, bringing back the insured to the same financial position before the loss had occurred. Okay, I'll repeat. It is a principle which states that you have to bring back to the same financial position before the loss had occurred. Okay, say for example, your bike met with an accident. Okay, your bike met with an accident, and you have damaged your say your gear system or something like that, and the cost to repair the gear system is 5,000. So the company has to either replace the gear system, or they have to pay you the amount to replace it. Okay, so by that they are indemnifying you. They are bringing back you to the same financial position before the loss had happened. They're neither making you profitable nor they are making you in a loss. Okay, so this is indemnify. Next principle is subrogation. Okay, what is subrogation? Subrogation is the transfer of legal rights of the insured to the insurer after the insured is compensated for the loss to recover the amount of loss from one legally liable for it. So this usually happens in auto insurance. Say there are two parties, A and B. They meet with an accident. So A's insurance company, excuse me. So A's insurance company has to pay the losses which A has occurred, right? But after paying the losses to A, he has a legal right to collect the money from B because B was at fault, right? So it is the transfer of legal rights to the insured to the insurer after the insurer is compensated. Okay. The next principle is contribution. So here contribution. Yeah, Lakshmi.
On this subrogation, could you just tell me that let's assume a scenario that there's been a damage to the extent of 1,000, and according to subrogation, if I am an insurer, I'm allowed to have rights on whatever is being damaged after I put the compensation amount to the person who is putting insurance, right?
Right. See, there are two things. Okay, subrogation doesn't mean that you have right over the property. Okay, I'll explain you in a better way. So, say for example, there is a party A. The A's insurance company will have to definitely compensate A for ₹1,000. Okay, once he compensate A for ₹1,000, now he has the legal right to take the compensation back from B. He can either take it from or he can take it from the B's insurance company.
Okay.
You're getting this scenario? So he is trying to claim the amount which he has paid to A.
Okay.
Okay, so this is called a subrogation. So what you are talking is the salvage rights. So say for example, A has a motorcycle and A's motorcycle has damaged. Okay, it is damaged to such an extent that it cannot be repaired. Okay, so what he has to do is he has to replace it. So he has to give him a new motorcycle, or say for example he has to minus the depreciation. He gives the amount. Now whatever is left out of that motorcycle, the insurance company has the right over it. So this is called as salvage rights.
Okay. I get it.
Okay.
Yeah.
Yeah. The next part is contribution. So what is contribution? Contribution is, this scenario comes into picture when an individual has two insurance policies. Say for example, one individual has two insurance policies from A as well as B. So what happens when a loss occurs? Okay. Say on the same object, the person has taken two insurance policies. So in that particular case, what happens is both the insurance companies will have to pay the proportionate amount to the insured. So you cannot ask the full amount from A as well as from B, because if he does that, he's in profit, right? He's in gain. So he can only take proportionate amount from both the insurance companies. Yeah, getting this concept?
Amar, I have one question here. Right now you just said like the one who is paying more will be in the profit. I didn't get the concept behind it.
Contribution?
No, like just now you told like the one who is giving more will be in the more will be the more who gets more benefit.
Okay, so see the contribution concept is like this. Say for example, an individual, you have taken an insurance from company A and company B. Okay, for your house. Okay, from A you have taken 40,000 rupees. Okay, the coverage is 40,000 rupees from A, and from B you have taken 60,000 rupees coverage.
Okay.
Okay, but the net worth of your house is 1 lakh rupees.
Okay.
Okay, so in that case you have insured yourself as 40% from A and 60% from B. Agreed?
Okay.
Correct. So assume now a loss occurs of rupees 1,000. Okay, so you cannot claim. There is a loss which is occurred for 1,000 rupees. You cannot claim 1,000 rupees from A as well as 1,000 rupees from B, because if you do that, you receive amount 2,000 rupees. In which case you are in a profit, right? You have 1,000 rupees profit.
Okay. Okay.
Correct. So what you can do is you can take 40% of 1,000, 400 rupees from A and 600 rupees from B. So this is the concept of contribution.
Okay, but how the insurance company will get to know like how many insurance that the particular person has with him already, with him or her already?
Is there any kind of tracking system that
what happens in US?
Yeah, the same question, like is there any kind of tracking system that the insurance company is maintaining?
Yes, right. So in US markets, what happens is there are a lot of third-party services like LexisNexis is one, which keeps a track of each and every individual. Okay, so your SSN number is mapped. Okay, once you take a policy, your account is entered into CCTV. Okay, which is current carrier database. So there you will come to know which all insurance company you have been tied up to. Okay. I'm not aware of Indian markets. If anyone can add up to the same question to Indian markets, it would be great.
Okay.
Amar, on the same thing, I have a question. So, is this contribution also applicable for life insurance policy, or is it only for general insurance? Is it applicable?
It's applicable on all insurance policies.
So, I can have an insurance policy, life insurance, like split up between 2 or 3 companies. Is that what you mean?
Yes, you can.
Okay. So the same principle will apply, right? The amount of contribution will be the same as the others also, right?
Correct. Yes, right. The same principle would happen to apply.
Lakshmi, get your question.
There is another
again.
I'm sorry.
Lakshmi, I didn't get your question. I didn't get a concept of the question. Can you just come back again?
Okay, I was asking like if this contribution also applies for life insurance policies. Like, can you split up life insurance policy between 2 different organizations?
Okay. Okay, fine.
I have a question here.
Okay.
Why will someone, take a insurance from 2 different organizations when you will get insured from a single organization itself?
Okay. See, what happens here is, again, I'm trying to explain this from the US markets because I come from there. I mean, my experience belongs to US markets. So say, for example, company A has a better premium or better product for bodily injury. Okay. But company B has a better premium or better products when compared to additional coverages. So if the insurer wants to split them up, then in that case, he's going to split into 2. 1 point. Second point is, if a loss occurs, okay, if a loss occurs, say for example, if it's a huge loss, okay, then the insurance company may not be able to, settle your claims if you're taking it only from one insurance company. So if you're splitting it up, so you are assured that, you are paid because there is 2 different companies involved in it. Make sense?
Okay. Yes. Okay, yeah, it's clear. Thank you.
Hi, I would like to add a point here. Hello, am I audible?
Yes, sure.
No, Abhishek here. I would like to add a point here. Like, even if though you've taken the insurance from 2 companies, your total claim amount cannot be like cannot exceed the amount of damage that you have occurred, even after claiming from those 2 companies. Am I right?
Yes. 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 Yes.
Even after claiming from those 2 companies. Am I right?
Exactly. That's what contribution says, right? That's what I was trying to
Yes.
explain. You cannot claim 2,000 rupees. You can only claim 1,000 rupees proportionately from all the insurance companies.
Yes. Yes. That's good. Thanks.
Yeah. Correct. Next, let's move to the next principle, which is proximate cost.
Amar, I don't know if we have this
The
covered in
this
the next. I just have
sorry.
something to ask if you don't mind. I want to know what is group insurance and how this contribution applies to group insurance.
So, group insurance is a different concept. Okay, so that doesn't belong to contribution. Contribution is when one individual is splitting up the policies. Group
Okay.
insurance happens when multiple individuals are insuring from one insurance company. You
Yeah.
might be hearing that in companies they go for group insurance, because when you're doing a group insurance, there's a lot of exposure units. The premium is low, okay, and the risk is also low. So that's group insurance. So that's completely different from contribution.
No, but is the same policy applicable to group insurance as well?
No. Group
No.
insurance happens to be multiple insured with one insurer.
Yeah.
Yeah.
Okay.
Probably we can get into more details when we come to life insurance. The group
Okay.
insurance happens to life insurance.
Okay.
Yeah. So moving to the next principle, which is proximate cost. The cost having the most significant impact in bringing about the loss under an insurance policy when two or more independent perils operate at the same time to produce a loss. Okay. So what is proximate loss? Proximate loss is the most dominant loss, or what in the chain of events, what was the triggering loss. So for example, if I have to say there is a house, okay, lightning struck, okay, okay, it hit furniture outside. The furniture caught fire, okay, the furniture caught fire, and then due to this fire, the sprinkler systems were switched on. The sprinkler systems which is switched on, and this water spoiled the furnitures inside. You're getting this scenario? I'll repeat. There is a house, okay? The lightning struck some material outside which caught fire, due to which the sprinkler system switched on, and the water which was leaked damaged all the furnitures inside the house. So what is the proximate cause, or what triggered this chain of events? That is lightning. Hope you're getting my point.
This is this the significant impacted one or the initially impacted one? I mean the cause.
It's the most significantly impacted one. So in this case, it is lightning because it's the one who initiated the fire. Okay.
Okay,
So we
but
can
I
also
have
say that
a
if it is
question here, like if the lightning struck something outside the house and then it caught fire, and because of the water sprinkler, the things inside got lost. So the majority of the problem should pertain inside the house, right? I mean, there was only a few items that got fire outside the house. So
no. But the
major
cause
loss.
of loss, yeah, the major loss which has happened is inside. That is furniture.
Yeah.
But what is the cause of loss?
No, the
That is
major
lightning.
function is inside, so it's lost because of the sprinkler system, right? So it's not
No.
because the lightning directly struck the furniture inside the house.
Yes, right. So that is the reason many people do not understand why, what is proximate cause. Okay, so proximate cause doesn't mean that what has damaged inside. What doesn't mean that what triggered the loss inside. I mean, what triggered the loss. Okay, that is the most dominant cause, or what initiated the chain of events. So that is called as proximate cause. What is the reason to understand proximate cause? I'll tell you. Because there are certain policies which do not cover lightning. Okay. So in this case, if an insurance company comes to your house for investigation, then they will say that I am not going to cover your loss. You know why? Because it is due to lightning which has damaged your furniture, and it is not the fire which has damaged your furnitures.
Okay.
So proximate cause is the most dominant one, or the one which initiated the chain of events. So this comes into picture when there is claim. When there is claim being raised from the insured, they come and see what is the proximate cause. So if the proximate cause is covered in your policy, then only they'll pay you. Otherwise, they are not going to pay you.
Okay. Got it. Thanks.
Yeah, I had certain quiz here just to make sure that everybody is listening.
Before that,
Afternoon time. Yeah, please.
Yeah, Amar, if you don't mind, can you please explain once again the utmost good faith?
Utmost good faith, yeah.
Yeah.
Utmost good faith is that principle which says that both the insured and the insurer should be contacted by the law to observe good faith. Means it is the duty of the insured to disclose all the material facts to the insurance company. Okay, so all the material facts means that if you're taking a life life policy, you have to disclose that do you smoke, or do you have any disease. All these kind of material facts should be disclosed to the insurance company.
Okay, got your point.
So shall we start few questions on what we just went through?
Yeah, sure.
Yeah, sure.
Yeah, okay. Most of them I think are using the chat window. I think I am. So you can just type in your answers. Okay, before we reveal the answers. The first question is: insurance is a tool for risk retention, risk avoidance, risk transfer, or risk prevention. So you can just punch in your answers there, I think, or we can have discussion over it if required. Okay, that's fine. Okay, so insurance is a tool for risk transfer. I think no questions asked. Everybody knows this. So we'll move on. If there is any question, we can discuss the answer. Okay. Otherwise, we'll just move on. Mr. ABC buys an insurance policy from XYZ company to insure his motorcycle. In this case, who is an insurer? Mr. ABC buys an insurance policy from XYZ company to insure his motorcycle. In this case, who is an insurer? That's XYZ. Moving on. Please stop me if you have any questions on this.
Amar, once I have a question to the previous question. Yeah. Here, if XYZ is called insurer, so what ABC is called?
He's an insured.
Terms. Insured, right? Insured, right?
RED, yeah.
Okay, okay. Sure.
Benson Industries has an automatic sprinkler system installed in the office. This is an example for which risk management technique? Benson Industries has an automatic sprinkler system installed in the office. This is an example for which risk management technique? This is risk reduction. Agree, right? Okay. Which one of the following is a hazard? Now, most of them might be questioning that we didn't discuss this topic. Probably, yeah, I missed this topic to include in my slides. So before this question, let's discuss two important terms of insurance. One is peril and the other is hazard. Okay. What is a peril? Okay. Peril is something which causes the loss. Okay. Okay. Peril is something which causes the loss, and hazard is something which increases the chances of loss. Okay. So I'll explain this question. We'll discuss on this itself. So fire is considered to be a peril because that can directly cause a loss. Okay. Lightning is considered to be a peril because it can directly cause you a loss. Wet floor is considered to be a hazard because it only increases the chances of loss. Say there is a wet floor, only if somebody comes and slips on it, then there is a loss. So wet floor is considered to be a hazard, not a peril. Flood is considered to be a peril because that can directly cause the loss. Right? So moving on, that's wet flow. Which of the below activities cannot be insured? Which of the below activities cannot be insured? Please take your time to read the question. Yeah. Trading in stock market is not insured. So hazard can intensify what? Frequency, severity, or both. If there is a wet floor, it can increase the frequency of the fall. It can also increase the severity of fall. So that is both. Mr. A wants to insure.
I have a question about the previous one. So you said hazard is something that actually intensifies the peril, right?
That gives a chance for a peril. Okay, what I said is hazard is something that gives you a chance of loss.
Yeah, no, my question is actually that if I go, let's say that wet floor is the hazard here. If I know that there's a wet floor, it only gives me severity. But when I know that it's already there's a wet floor, I'm not going to, let people go walk on that place. So how is it going to increase the frequency of the hazard?
No, that's definitely kind of you for not allowing someone to go there. But then if at all it's not seen, then definitely it's going to increase. If there is definitely the severity there. Okay, because if there is a fall, then that might be damaged very badly. And the frequency, when I say frequency, because say for example, in this example of wet floor, it may not give you correct meaning, but if there is a say if I have to explain you in a better terms. Yeah, in this case, definitely it doesn't mean frequency, but then hazard can intensify both frequency and severity. I'll get back to you with a better example for a hazard. Okay.
Okay. Yeah, thanks.
Amar, can I give an example?
Yeah, sure.
Let's say, Lakshmi, there is an open wire, like a current wire. So that's an hazard because not only it's severe for to cause any kind of peril, but also the number of people who can get affected is also high in that cases.
Okay.
Yeah, that's a good point. Open wire is open wire is again a hazard. It's not a peril. Until someone goes and touches there, it's not going to give you a loss. So that's a good one.
Yeah, thanks.
Here, Mr. A wants to insure his friend's mobile, but is rejected by his insurer based on which principle? Agree, right? I think most of them will. Okay, so that's all I had for the quiz. Okay. I think we can continue the session, right?
Okay. Other thing I wanted to ask is, I hope I'm not disturbing too much. Can you just tell me about the mitigation of loss principle? I don't think we have covered it or something.
Sorry.
No, there is this principle called mitigation of loss. I'm not so sure about what the concept is, but I've heard people talk about it.
Mitigation of loss.
Yeah.
Mitigation loss is not a principle, first of all.
Okay.
Okay. Mitigation is a management technique, you can say. Mitigation is what? Is reducing, right?
Yeah.
Yeah. So it falls into the risk management technique. So that's risk reduction.
Okay.
If you're going to mitigate the risk, then you are trying to handle risk reduction kind of a technique or loss reduction kind of a technique. So definitely it's not an into the principles, but then it's one of the management technique.
Okay.
Okay. So next, coming to business flow or insurance business flow, this is the value chain of insurance. You know, there are various functions of insurance here, as you can see, and this is where a business analyst falls. Okay, so you can pick any of these particular functions, and you have a business analyst working there. Okay, so this is where the real-time scenario, I think Samir was questioning at the start of the session. So this is where we work. Okay, so for example, yeah. So I fall into this function, which is policy acquisition and servicing. So we take care of issuing a policy, issuing a quote. We also endorse policies. Okay, we give policy renewals. We rewrite the policy. We cancel the policy. We reinstate the policy. We also give the policy document. Okay, you might have seen once you get an insurance, you get a 2-page policy document, right? So that's customer communication. Okay, so I fall into this function. So maybe the other people on this call, whoever is in insurance, may fall into underwriting, or they are doing some other task. Okay. So
yes, I'm into the claims segment.
Claims segment, yeah. Claims is one more good thing, and we have underwriting. Underwriting is one of the booming area, right? Where there are a lot of products which are used, like Duck Creek, Guidewire. Somebody was messaging in the group like he's working in the Guidewire, and that's one more tool which is used for underwriting, right? So we'll just briefly touch upon quickly on the various functions here. I'll not go into details again because that can be read by yourself. If at all I'm sharing the PPT to you all guys. The first section is product management. What happens in product management is whenever you have a new insurance product, you have to define the product, or you have to configure the product. So while doing so, you might have to understand what are the various rates which you have to fix for that particular product. So it doesn't happen for the general products like homeowners or automobile. It doesn't happen for them, but a new market, a new product like cyber insurance. So recently there was a lot of talk on cyber insurance, because cyber insurance is something which is new. Most of the insurance companies do not have a cyber insurance product, okay, as such. They cover that risk in some other products. So if you want to define or if you want to introduce a new product, so that's into product management. You have to design, you have to go through the actual process. I mean, what are the rates, how you are going to finalize on the rates, how you are going to configure the rates, how you are going to configure the product, how are you going to file the product. There's some point called as product filing. So whenever you are building a new insurance product, you have to make sure that all these rates, all these premium charges have to be informed to the regulatory bodies of insurance. So if I talk about US market, there is NAIC, which regulates in US, and you also have the state regulatory bodies as well in US, right?
Amar, sorry to stop you. I have one question, Amar. You just happen to tell me, like, I have one question here. So you just happen to explain like about the cyber insurance. Look, what is cyber insurance all about? Can you just give one viewpoint on this?
Sure. So what happens is when there is a cyber theft, when I said cyber theft, it may be hacking, it may be an intentional activity done on a cyber or over a network. Okay, so these kind of losses are covered in general liability. as of now. So what are the losses?
Okay.
What are your losses if your account is hacked? What are the losses which you are going to occur? One is your identity is gone, identity theft, because your account may be used by someone else, correct?
Yeah.
Second thing is most important, the financial data, like your credit cards, your credit bills, all these can be used for some other purpose.
Okay, so
Correct.
you mean to say it's more of a hacking thing, that's the more of hacking activities that affect the cyber insurance?
Yeah, hacking is one of them. I term it as cybercrime.
Okay,
Whatever
okay.
activities fall under cybercrime is called it has to be covered under a different portfolio, which is cyber insurance, because the loss is huge. Okay, I
Okay.
think Yahoo was latest in the news that its server got hacked or something like that. So it
Okay.
had to settle a lot of claims.
Okay, okay.
Right. In that case, you have to have an separate product for that, and
Okay.
higher premium also.
Okay, so you mean to say it's lies under the principle of proximity cost?
Correct.
Yeah,
Yeah, you can say that. Yeah, because when you go down to the thing, the cost is different.
okay, fine. Sure. Thank you
You
very
can
much.
say that.
Yeah, yeah, cool.
Yeah, thanks. The next function is marketing. Okay, here marketing, I don't see many business analysts falling into this function, because marketing is done by a lot of marketing guys or the sales guys, and also there are a lot of agents and brokers who are doing this. Okay, I see a lot. I see little less involvement of a BA. I see a lot of development analyst, but not a business analyst as such. Next is the sales and distribution, which is used for the sales and distribution. So what are the different distribution channel for insurance? One is the direct sales, which are through the websites, or other is the agent distribution channel. The other is the broker channel. Okay, so these are the other different various sales and distribution channels. Again, I don't see any involvement of a BA. Next is underwriting and risk management. I see a lot of scope here. Okay, because whenever you are doing a rating, when I say rating, what does rating mean? Rating means that you are calculating the premium. How much should be your premium? You are going to insure your house. What is your premium? Again, your premium will be decided on various factors. Okay, those are called as rating factors. Okay, so here I see a lot of scope for a BA, because there are a lot of products which are in market which are configurable. Duck Creek, as I said, First Best is one more. Guidewire is one more. These are doing good, very well in the market for insurance. Next is policy acquisitions and.
1 second, Amar. I have one clarifications between this to marketing and the sales of sales and distribution. So as per my experience, not by BA, but previously a marketing guy. So I used to be in the marketing and then handle sales and distribution. So can you not couple this in insurance terms, like in insurance in the environment of what are the work life? Can it not be clubbed into one, or why any purpose, like why these two are segregated into two different sectors?
See, marketing is pre-sales. Okay, before sales, whatever activities you are doing is considered to be marketing. Okay,
yes.
You are going to understand. I say for example, cyber insurance. In this case, you are going to understand what is the market for me, or what is the scope, or who are the probable buyers. Okay, so this is into marketing function. This doesn't belong to sales.
Segments of targeted segments of marketing.
Yeah, correct. Targeting segment targeting and branding also comes into marketing. It doesn't fall into sales.
That's true, yeah, yeah.
Correct. So that's the reason I think it's been distributed. I mean, it's divided. But then I don't get into that, because as a BA, I don't see much of a scope here.
Okay. Okay. Fine. Cool.
Okay. So policy acquisition and servicing, that's where I work. Here, what we do is we issue a policy. So you can see a term called as quote. So quote is nothing but an estimation. So whenever you want to buy something in insurance as well, you can ask for a quote. So when you ask for a quote, they give you a policy. They give you a quotation. It doesn't say a policy. It's a quotation wherein you have an estimated premium. How much is your premium? Okay. I hope you are understanding the terms premium, policy, right? Please stop me if I'm using some jargons here, right? They'll issue a quote wherein your premium will be decided. Yeah. Where your premium will be quoted. If you want to accept it, then that will turn into a policy. So policy is a contract. Quotation is not a contract. Okay, that's a major difference. So once you have written a policy, it means that you are in a contract. Okay, then what are endorsements? I think most of them know this. Endorsement is any changes made to the policy. If you want to make any sort of changes, if you want to make a change of address, it's an endorsement. If you want to add one more vehicle to your policy, it's an endorsement. Okay, so these are called as endorsements. Any changes to the policy. What is renewal? Okay, policy renewal is once the term is over, you are going to renew your policy. Say for example, for every I think in property and casualty it is 1 year. Usually it is 1 year or 6 months. So once the 6 months term is over, you have to renew the policy for 1 more 6 months, pay the premium, and you renew the policy. Okay. So let's move on to
one number, like whether the renewal cycle or the period is prefixed by the company, or like it is depends upon the insured one, how long he need to renewal it again, like that.
See, that depends on the insurance company. So for usually the motorcycle is for 1 year. Okay, in US it is 1 year. Yeah, and in certain cases, there is a chance or there is a choice given to the insured as well, whether you want to select a 6 month policy or a 12-month policy.
Okay.
So I've seen that conditions as well.
Okay.
Okay. So claims management, I think one of the guy is that he works on claims. So if he can take up this function, would be great.
Yeah. So I work on the claims thing. As Amar has mentioned, we use the claims application. Yeah, go ahead.
Yeah, okay. I mean, I think we didn't discuss about policy reinstatement, rewrite, because I wanted to know the difference between renewal, reinstatement, rewrite.
Achha, let me take that question. That's Amar here again. Yeah. Policy renewal is once you have completed the term, you are going to renew the policy that you want to continue the policy for 1 more year. Okay. What is reinstatement? Reinstatement means that your policy has lapsed. Okay. You didn't pay the premium. Okay. The policy got lapsed. Okay. You didn't pay the premium. So after 30 days or after say 60 days, you go back to the insurance company and say that, hey, listen, I want to continue or I want to bring back my policy into life. So that is called as reinstatement. You are reinstating the policy. You are giving life. Now what is rewrite? Okay. So now there's an important difference between reinstatement and rewrite. Rewrite means, say for example, you have lapsed your policy. You have not paid a premium or something like that. Your policy is lapsed. Okay. But after 6 months, you go back to the insurance company and say that, hey, listen, I want to bring back my policy to life. Okay. Now in this case, he doesn't just reinstate your policy. He goes back to the books of accounts. He again goes back to the underwriting rules and he rewrites your policy. So in this case, your premiums may increase severely because he is rewriting your policy. He's again checking the underwriting rules, whether you are still belonging to that section to be insured. Getting this difference?
Okay. Yeah, and also while renewal also we can go for rewrite as well, right?
You can go for, you can go for, but then generally you don't, because if you are going to rewrite the policy, then your policy premium will increase, because again you are going to consider the recent latest age, and based on the age again your premium will increase. So usually you don't. You have the option, but you don't.
Okay, fine. So I mean, just to summarize, like in case if you are changing the policy, that means you are not renewing the policy, but you are rewriting the policy actually.
Yeah.
Yeah. Okay. And rewrite and reinstatement happens only after the policy cancellation, right? I mean, if I'm not wrong.
Yes. That is after policy cancellation.
Okay. Thanks, Amar.
Yeah, thanks. Yeah, someone was taking up the claims management.
Yeah, so like I'm working on a US insurance claims project, and we are using Duck Creek claims application. Now Duck Creek claims application takes care of everything from start, from a claims initialization to the claim closing. and meanwhile in that everything is covered, like when a person calls for a claim, and he lists down what all were their losses, and for that first the coverage match is done. Means like if there is a loss which is being mentioned by him, then it is first verified if it is covered in the coverage for that. Then there is a coverage match process for that. It is verified if that coverage was covered in this policy. After that there is reserve set for that claims. Reserve is something like what a policy, like what the insurance people set aside some money for settling that claim, and using that claim, if everything is genuine and the loss is genuine, then they have to make the payments for that. And after the payments are done and everything related, the related investigation and all is completed, a claim gets closed. I'm not able to see the screen, so I'm not exactly looking into what were the points mentioned over there. So, but this is what like a short description on what the claims process is. I would suggest Amar to continue the different parts because I'm not able to see the screen.
Yeah, that's fine. That's fine. Yeah, thanks for that. You have almost covered everything. So I thought that we'll have a different session for this. I mean, we can have a different session on underwriting claims, which will give a more in-depth overview, wherein we can discuss the life cycle and everything. Okay. Going to finance and accounts, so this is the last function, wherein this belongs to the billing part. So again, as he mentioned, Duck Creek also has a billing module in it, so you can use Duck Creek for billing as well. So here you prepare the statement, you give the financial accounting, then you keep the records of the books. So all finance and accounting. Again, I don't see a BA working on this. The major role of a BA in this life cycle is product management, underwriting, policy acquisition servicing, and claims. So those who want to enter into insurance as a BA can make a note. So what are the different parties involved in the insurance? So I'll just quickly run through this because this is, I think most of them know by now. So one is the insured, and then this is the insurer, which is also called as carrier. Okay, insurer here, primary insurer, and then there are intermediaries which are called as agent, broker. Okay, agent producer or brokers, and then they interact with the insurance company. Okay, they have this module of billing, claims, and policy servicing. Okay, and then there are other business partners. Okay, which are called as banks, financial institutes. Then you have credit scorers, insurance analysts, rating agencies, third-party data providers, regulators, and then finally you have the major set here, NAIC and insurance regulators. So these are the parties which are involved in insurance business.
Amar, I have
Any
a
section
question.
you want me to?
Hello.
Yeah, please go ahead.
Amar, I have a question on the broker request. See, is there any number of number being set by the insurance company wherein they should have this number of brokers or the agents for them? Because I don't know much about this brokering system, how it works. Like there will be a person who gets the more business to the company, but meanwhile, is it like the certain number of brokers should be there for this insurance? Is it something like the IRDA what the fixes for each company?
No, see, a couple of things to clarify here. There is no hard and fast rule that every company should have a broker. Okay, because there are companies which do not have these intermediaries at all. They only work on direct channel. Okay, they only work on direct channel. They don't have these intermediaries at all. So there is no hard and fast rule that how many brokers should be there. First thing. Second thing, you mentioned something about IRDA, right? Yes. So IRDA is nothing. Yeah, it has got nothing to do with broker. IRDA is the insurance regulatory body of India.
Okay.
Just like NAIC in United States, in India we have IRDA.
Yeah.
It takes care of it, looks after the regulatory changes or regulatory changes of the Indian insurance market.
Okay.
I just
that was you.
had a thought like even IRDA regulates everything of insurance company. So now I'm clear, Amar. Sure. Thank you.
That means Amar, you are currently
yeah.
working for a US project. That's why you have mentioned here NAIC, right? But for
Yeah.
but for India it will be IRDA. Actually, I was confused about
For
NAIC.
Indian markets, it's IRD.
Okay.
Okay. See again, if you see United Kingdom market, so the regulatory body there again changes. Okay. So the regulatory body depends on the state or on the state. So for India it is IRDA. For US it is NAIC. Okay.
Okay. Thank you.
Amar, I had a question.
Please.
Amar, I had a question. What is ISO related in US? When in the
ISO,
claims
right?
part, in the claims part, there are like few options where you can send the details about the coverage or the newly acquired claim to ISO. What does ISO play part in this thing?
Okay. See, ISO stands for Insurance Services Office. Okay. So this body, what it does is it helps the insurance company to build up standards. Okay. Say for example, if you might have heard of homeowners forms, right? HO3, HO2, HO5. Have you heard of these forms?
No, not too sure that.
Okay. So these forms are the standards which are set by ISO. ISO says that these are the set of coverages which you have to give to the customer when he is purchasing a homeowner's policy. Okay. Again, it is not hard and fast rule that every company should go with ISO, but yes, Duck Creek has an implementation. I believe that it has a different module which it can integrate to ISO. So you can directly inherit all the ISO properties. So that's the reason you are sending the claims or new coverage added to ISOs.
Yeah. Oh yeah, correct. Thanks, Amar.
Okay. ISO is the Insurance Services Office, which sets the standards for the coverages and it helps with the data to the insurance companies.
Okay. Yeah. Thanks.
Just to clarify, it's not a regulatory body. It's just an service. Okay.
Yeah. Okay. That was a confusion. I was like considering it as a regulatory body.
No. I think ISO. Some people also confuse with the International Standard Organization, ISO mark, something like that, right? So that's a completely different from this ISO.
Yeah. Okay. Thanks.
Okay, moving on. I thought to explain the underwriting function because that's one of the important aspects, but I think we are short of time. I'll just quickly run through that underwriting module. Okay. So what happens in underwriting? So underwriting is a process where you are going to analyze the risk. So here, what is the task of an underwriter? He either accepts the policy, accepts the risk, or he rejects the risk, or he accepts the risk with an additional premium. Okay. So that is the task of an underwriter. So here we are going to analyze only risk. So we'll start with the process. So here is a customer. A customer comes, he sends the application to the agency. If there is any intermediary channel, then he sends it to the agency or the broker. He completes the application, he sends it to the application. If it is complete, he will pull up all the external reports. Say for example, external reports means that in US we have MVR, which is called as motor vehicle report. So by just giving your vehicle ID, they can gather all the information, the make, model, the mileage, the odometer readings, etc. So he'll collect all this information. He'll then analyze the risk. So if it is high, then he'll reject the risk, and if it is acceptable, then he accepts the risk. He will then rate the risk. When I say rate the risk, he'll fix the premium. He'll give him a quoted premium here, quote premium, and then he sends the quote to the customer. And if the customer accepts the policy, they will bind it and they will give you a policy, which is called as contract. Am I clear?
Amar.
Good, right? Okay, so let's move on. I think I am coming to a close now. So we're just going through, you're just naming few line of business. So when I say line of business, means that what are the types of properties or what are the types of insurance can be covered. So at the first very beginning, I said that it's divided into two: property and casualty and life. So what are the different products in property and casualty? It is fire, marine, automobile, liability, engineering, workers' compensation, health. Homeowners is also there. That's fine. And in life insurance, it is term life, whole life, universal. So I
Amar, isn't fire insurance same as property insurance?
Yeah, that's why it's mentioned in property and casualty.
No, I'm just saying that is it? I mean, specifically property insurance. Like if I want to insure a building or something, does it come under fire insurance?
No. That doesn't become a fire. If you want to insure your say home, that's your homeowner's insurance. If you want to insure your automobile, then it's your automobile insurance.
So does fire insurance means like I want to protect, insure the fire, fire hazard. So that's why that is fire insurance.
You can say that, yeah. Fire insurance is something which is specifically taken for the cause is fire. But then usually for homeowners, you don't take it, right? Because you have a homeowner's product by itself. So only if the risk, you have a high risk of fire, then only you take a fire insurance as a separate product.
Oh, fine. Okay, fine. Thanks.
So I think most of you may be aware of the terms of life insurance because these terms are also used in Indian markets. Term insurance, whole life, universal life, variable, ULIP. I think most of you have heard at least ULIP. Unit linked policies, which are linked to the market, and it gives you the insurance as well. Anyways, so we can cover that if at all it's required in the upcoming sessions. Okay. So
what exactly is whole life and universal life?
So whole life is like, there is no term. I mean, whole life happens to be, it's kind of an insurance wherein till the death you are covered. Okay. And in universal life insurance, what happens is you are covered for the permanent life. Okay. But then you have an option to invest. You have a chance to invest in the markets or in the funds which you are interested for.
Also known as endowment policies, right?
Kind of, yeah. You can say that. Okay. So endowment is also one type of policy again. So there are a lot of terms in life insurance. So if at all we have a session, we can cover those.
Okay. Thank you.
Yeah. Last but one session, I think it's insurance terminologies. We'll quickly run through the insurance terminologies which will come across. So what is policy limit? So it indicates the maximum amount that will be paid. Okay. Say for example, you have a motorcycle insurance. So the limit of the insurance is 1 lakh. So that's the maximum amount the company will pay. So it cannot pay more than that. Even though you occur a loss more than that, it will not pay because the limit is 1 lakh. Yeah.
Yeah.
Next is self-insurance, which you already know. Risk retention, endorsement, you already know. Amendment or the changes. Express authority. It's the authority given to the agency to bind a coverage. Okay. So some insurance companies say that to the agencies that you can directly go and bind the coverage. You need not come to us. So you are having the underwriting authority. You need not quote to us. You can directly bind the coverage. That again happens to the up to a certain specified limit. What is a binder? A binder is nothing but a quote. It's a temporary insurance contract that provides you the coverage until a permanent policy is issued. Okay. Next, what is actual cash value? What is replacement cost? Okay. What is an actual cash value? Okay. Say for example, you have a motorcycle. So you can either select actual cash value on it or replacement cost. So when you select actual cash value, it means that the value of your property minus the depreciation, that's the amount you're going to get. Your bike is of 1 lakh worth, depreciation is 10,000, you'll get 90,000. What is replacement cost? Replacement cost is the actual amount which is required to replace your property. Say for example, you have taken the bike for 1 lakh, okay, but now it's worth 90,000 or 95,000. So insurance company is going to pay you 95,000 for that. Even though if the cost is 1,10,000, the company is going to replace. I mean, the company is going to pay you 1,10,000. That's replacement cost. Next is agent. You know who is an agent who sells and on behalf of the company. Cancellation. We have talked about cancellation, termination of a policy. What's a deductible? Anybody? Most of them have an auto insurance at least. What's the deductible?
I think deductible is a fixed amount that will be deducted from the expenses that will be covered, isn't it?
Exactly, somewhat, yeah. So say for example, you incurred a loss of 90,000 and your deductible is 1,000. Okay, so the company will pay you 89,000. So it is the portion of the insured loss minus the deductible. So this deductible is included in your policy. That should be paid by the policy holder if he in case he incurs a loss. Okay. What is effective date? What is expiration date? Effective date is the date at which the policy starts. Expiration date is the one on which the policy expires. So even if the loss occurs 1 day after, you are not covered. It should be strictly under this. What's a peril? You all know peril is fire, flood, theft. What are open perils? Whenever you come across something called as open perils, it means that you are covered against everything. Okay, everything under the policy, only which are not especially mentioned. Okay, so if the policy says that open peril except fire, which means that you are covered for everything except fire. And what is named perils is the reverse of it. Only those perils which are named: fire, theft, lightning. So you are covered only for these three. Okay. What's an exposure? It's a risk of possible exposure, which like a house is a possible. What is your personal property? Your auto, your house, all tangible properties. What is a surcharge? You should be knowing what is a surcharge and discount. So the company provides surcharge, which will be an additional charge to your premium. Say for example, you have made traffic violation, so you have a surcharge. Otherwise, you have a good student. You are a good student, or you have no claim. You get a discount. Okay. Subrogation we have already discussed. Oh, good. So those were the terminologies. I did quickly run through them. Definitely, if you have any questions on any of them, you can contact me. Yeah. And I'm to my last slide now, which gives you details on certifications which are available for insurance business analyst. The first one is Associate in General Insurance, AINS. This is the most popular one provided by the institutes for US market. If you want to clear this, if you want to be an associate in general insurance, then you have to clear three certifications. That is INS 21, 22, and 23. And then next is FLMI, Fellow Life Management Institute, provided by LOMA. This is for life insurance, again by USA. Then we have General Insurance Essentials, which is for Canadian market. Then you have CII, this is Chartered Insurance Institute, which is for UK markets. If you're exploring any opportunities in UK, please go for this certificate, which is Certificate Insurance provided by CII. You have Indian market as well. You have certificates for Indian market, which is there are different variations or different levels in that. licentiate, associate, and fellowship. This is provided by Insurance Institute of India. So to begin with, if at all you are interested in insurance domain, you can start with any of them. First finalize which domain, I mean which particular line you have to go, whether it is general or life. Once you are finalized with that, which market you are targeting, based on that you can pick any of this, and it gives you a basic good hands-on or good knowledge on insurance.
Amar, any idea about?
Amar, have you done any kind of certifications which has been listed here?
I've done associate in general insurance provided by the institutes.
The first one.
Yeah, the first one. That's into general insurance, again into US market.
Mm-hmm.
So I think that's $125 for one certificate.
Yeah, Amar. Any idea about? Yeah, even I have done ANS 21 and 23. I just wanted to know about any other insurance certifications for Europe or like any other like segments, like
Europe.
Europe, like the CII is sufficient for Europe, covering whole Europe.
Yes.
Okay.
Yes. CII should be good for UK market, because the only difference I see in UK and US is the on the terminologies. You know, the terms used are different. Okay. So just going through them, and the regulatory body is different definitely, but the basic principles on which the insurance is built up remains the same. Only the terminologies differ.
Okay. And according to your like analysis as of now, what do you suggest? Like, which are the best insurance segments other than US right now? Like in the career perspective.
I see US, one of the vast insurance, because there are a lot of insurance companies there, and the penetration of general insurance in US is very high as compared to India, because Indian market, there is only, I think it's around 5% or 10%. I'll not be shocked to say that, because there's only 5 to 10% of penetration here in India, and even in UK,
around 5%. Yeah.
Yeah, I think so. So even in UK, there is less scope compared to US. So US is one which is vast, and that's a good one to begin with, definitely.
Okay.
You have Asian markets as well, right? You have Singapore, Malaysia. You have there as well, but the opportunities comparatively are less.
Okay, and which certifications are like recommended for the Asian market?
I'm not sure about the Asian market, but for Indian market, definitely go for licentiate. Go for these 3 levels. If you are completed with these 3 levels of III, then you are good to go.
Okay. Okay, thanks, Amar. That was awesome.
Yeah, thanks very much. So I'm done with my presentation. I mean, whatever sessions we did. Yeah. Any questions?
Amar, I have a question. Like,
hi Amar, I have a question on the claim you were going to 5 minutes back.
Amar, my question is, Amar, are these things are enough for a BA to search a job in insurance domain, or we have to drill down more into this domain?
See, what I have given you is a very basic overview of what insurance is. Okay. Definitely, if you liked, or if you have an interest or you have tendency towards this insurance, then again I opt for one of you. Please opt for one of these certification. If you are going for general insurance, please opt for INS 21, which gives you a very good hands-on experience on basics of principles of insurance. Basic principles of insurance.
Okay.
So I believe that's the way to begin your career in insurance as a BA.
Okay. So
also when I started my
I am saying,
when I started my speech, when I started this presentation, I was saying that.
Yeah, tell me.
Yeah, go ahead.
Yeah, actually, I'm just saying, can we have a separate session with more detail in advanced level in the future sessions?
yeah, we definitely can do. Okay, if you have to do, then these are the areas where we have to work upon. I mean, as I said, product management, underwriting, policy acquisitions, and claims. These can be taken up as a different sessions. Okay, this is one, and the second part is this. This is one more part wherein we can expand on, like you can get into the details of product property and casualty, and that too on workers compensation. So thereby you are getting to know the product completely. So these are the two sections where we can expand upon. We can try to find the experts on this and then try to have sessions, follow-up sessions.
Okay. Okay, we will discuss on group and we can proceed further. Okay.
Yeah, that should be good.
Okay.
And also, as I said, this is one side of the business analyst. So the other side is the business analyst skills. So domain is one thing. Domain is something which you have to know to perform your day-to-day activities. But then you should also be having business the business analyst skills, analytical skill.
The basic things like the total process of HDLC, software development lifecycle. We are
correct.
Yeah,
HDLC.
I'm also planning to.
For that section.
Yeah, actually, I'm also planning to organize such sessions with the basic BA skills. But I'm thinking, let's go one by one. Like currently, it is more important to have the domain knowledge for most of us. So we can have the domain knowledge, then after that we can go into those sections.
Yeah, sounds good.
Okay. I think Pratik was saying something.
That's it all, guys. I had. Thanks for joining. Thanks, Samir, for organizing.
Amar, can you share this slide if possible?
Yeah, I'll do that. I'll do that in the group
Amar,
itself,
yeah, even I was thinking the same. Amar, you just share the slide to me, and I will create one repository on Google Drive, and I will share across our team in the group. Okay.
Yeah. That's Samir, right?
Yeah, Samir.
Okay. Yeah, I'll do that. I can do that. Yeah.
Okay. And
Samir, like.
Yeah, Pratik.
Hello. Hello.
Yeah, Pratik, tell me.
Yeah, Samir, we can just do one thing, like we can just gather all everybody's emails and then have a BA group and a common any Gmail or some Yahoo.
Yeah,
so
sure.
That we can,
sure, Pratik. Just
any sessions here we can send across one mail to.
Definitely. Just give me some time. Definitely, I will do something. Okay.
No. It's not in a hurry, but I just thought about it.
Yeah, sure. I will do that. Okay. And Lakshmi, are you there?
Yeah.
Lakshmi, I know it's getting difficult for you to attend this session as it's early morning there in your place. May I know the time? What is the time now?
It's like 4:26 a.m.
Okay. I'm sorry, Lakshmi. Actually, we had to conduct this session for this time slot as most of the people were asking for this slot only. But next time I will do something. Okay. And Amar, thanks a lot for such a nice session. It cleared most of the things. Hope to get more such knowledge across different domain from you people. And so thanks everyone for your cooperation today, and I really thankful to you. Thanks all.
Samir, one thing. Samir, I just want to add one thing. I would definitely appreciate the feedback. If you can send back, yeah, if you can send back the feedback, or how I could change, or how it was good. You can WhatsApp me personally as well. That's fine.
Okay, okay, okay.
Yeah, Amar, it was a very nice explanation, and I would really like it. Really, I wanted to appreciate it. It was a like altogether knowledge you were sharing, and one person being expert in all the segments of the insurance. I was really amazed by that. I really appreciate it. Thanks a lot. Thanks a lot. Thanks a lot for sharing.
Yeah, looking forward to more such sessions.
Yeah,
Thank you.
yeah, it was such a great session actually.
Thank you, guys. I would be leaving right now.
Okay.
Thanks once again, Sami, for organizing thing.
Okay, thank you. Is there anyone want to say something to Amar?
I think given the very short period that we said we'll have the presentation, Amar has done a very beautiful presentation.
Exactly.
And I kept on asking questions, so sorry for the interruption. I just wanted to know about the topic. And
No,
I
that's
want
great.
to thank Amar for arranging this as well.
Hey Amar, thanks a lot for the wonderful knowledgeful sessions, and also thanks for clearing a lot of doubts. And really sorry for interrupting you in between.
No, my pleasure. Yeah, thanks everyone. Yeah, see you some other time.
Thank you, Amar. It's been a very good knowledge sharing from your side, and thank you, Sami, for organizing this a very good event.
Okay, thank you.
Giving a very good start for the event.
Thank you.
No, thanks, Amar. It was good to see the structure around the insurance, the framework around the entire industry. So thanks for that.
So, guys, shall I close this session right now?
Yes, we can close
Okay.
the session. Thank you.